When was the last time you saw negative jobs growth? December of 2020, and it just happened again. Fed's next move of a 25 bip cut is already priced in. Traders and investors are now asking one critical question: what now? Before we get into the technical picture and the charts, we want to go over some of the data that will be coming this week, which will be market moving. On Sunday, September 7th at 11 p.m. Eastern, we're going to be getting some data out of China, balance of trade and import-export prices. Monday is relatively quiet on the data set. Tuesday is where things start to pick up. At 10 a.m. Eastern time, we're going to be getting non-farm payroll annual revisions. Given what's happened in the past 2 months with payroll numbers and the revisions, this will be market moving, so I would be paying attention to it. 9:30 night Eastern time, we're going to be getting some more data out of China, inflation rate and PPI. Wednesday is where things in the U.S. start to pick up. So we will have core PPI coming out. We will be having wholesale inventories. That's going to be out on Wednesday. Thursday, obviously, is going to be CPI and core inflation. And then Friday, we're going to be getting Michigan sentiment, consumer sentiment. So there is a lot of data coming out before the September 17th Fed announcement on rate cuts. Let's get into the technical picture. The reason why we bring this up is it's important for traders and investors to know data-wise what's coming, especially when the data is relatively heavy and it is market moving. It's better to be aware of what's coming so you don't get shell-shocked when all of a sudden markets start making moves that were unanticipated just because of the data. Let's get into the technical picture. We're starting with the 15-minute chart of the S&P. We want to just show what happened. Obviously, hindsight is 2020, but there was a gap up on payrolls. Then the market was digesting the revisions and trying to understand what's going on. Now, you do have a situation where bad news is now bad news and good news is now good news. However, 25 bips is already baked in. And given that that's already baked in, depending on how the economy starts to do, we may have a situation where the market might start selling off on this. So let's go to a daily chart quickly. On the daily, the S&P is fine. And we pulled into the 8-day bounced and we're fine. We've had a big run. We're holding near all-time highs only because of this anticipation of this 25 bip cut. There are some that are calling for 50. We don't believe that 50 is in the cards. We don't even think that's going to happen. 25 is pretty much a guarantee at this point. The odds are somewhere in the 95 to 98% that they're going to do it. The challenge that's facing the Fed right now is inflation is picking up. So they may be cutting into an economy that's slowing down at the same time that inflation is picking up. So that's where their challenge now arises. Now you may be saying to yourself, the S&P looks great, the Fed's going to cut, what's the big deal? Problem that the Fed is facing is that with an unemployment picking up and job growth stalling, as well as inflation going up, that means growth is slowing, which by definition means stagflation. The Fed is not going to sit there and be reactionary. They're trying to keep a lid on prices. They're trying to keep inflation somewhat under control. It's a very hard task, but they're trying to do it. That's why, to a certain extent, you're getting a situation where Powell has not wanted to cut, and he's been signaling a lot about data and being data dependent because they're deathly afraid of inflation picking up as the economy is slowing down. Now, if the jobs numbers are giving us any indication of growth, we are slowing. The economy is starting to slow. It's not slowing to an extent where it's fearful, but we're definitely starting to slow in the U.S. So right now, the stock market is not really reflective of that. Market is holding fine. We're riding the 8-day. We came down a couple of times, got below the 21, held it, bounced right back up. So from a stock perspective, the market is still fine. It's fine until it's not. But for now, it's fine. Let's just look quickly at the NDX. NDX had the same thing, gap up, filled the gap, came back, went red, ended up closing green, held it a little bit better. It's holding where it needs to. We held the 8-day, we held the 21-day. We're holding where we need to. There could be a situation where we have a retracement. It's definitely in the cards that this could be coming. Now, in an environment that we are now, where it's very computer driven, A lot of these retracements, they seem very scary, but they only last 1 or 2 days. Now, that doesn't mean be max long as be buying every dip. It just means that things happen a lot faster than they normally would. There's a lot riding on this September 17th meeting. The market is pretty much at this point expecting 25 bips. If it doesn't get it, we're going to have a problem. For some reason, the Fed goes 50, which the odds are so against that, the market's going to rip. If they do nothing, then, like I said, we're going to potentially have real issues because the market is pretty much expecting it. Okay, so NDX is looking fine. Let's just look quickly at we'll go to the Russell and we'll go to the semis. Russell's looking good. Russell's still signaling risk on. Had a clear breakout of this 2330 level. We're holding it. We came back, retested, and continued back. As a breakout trader, that's what you want to see. So let's make a quick drawing just so you can see it more clearly. You could see we came in, had that breakout, authoritative move through it, got above, came back, held, bounced, kept going. So the Russell is looking good. Russell, from a risk on perspective, is definitely leading the charge. Let's look at semis quickly. Semis, choppy. It's holding, but it's really not giving you much. You can see the box that it's holding. They have this clear resistance up here at this 58, let's just say 58.30 area. We poked our heads up a couple of times, got above it, fell back down, got through it, gapped up, gapped down through it. So we're just kind of chopping around this 58.30 area. We'll get into some of the individual names and it will make a little bit more sense. That's semis. I see Fang Plus is doing well. A lot of this, as we're going to see soon, has to do with Google as well as Broadcom having a big day. So this is being driven by those two names. Everything else is a little bit more on, I wouldn't say shakier ground, but we'll get into it. Let's go into XLE, Energy. Energy was looking great. The XLE was looking really good going into last week. But then it fell, and it fell hard. So it's not as special as it once was. It was looking really good. It looked like it was going to be the trade of the week, and it was doing really well going into it. And then Wednesday, Thursday, Friday, it just got smashed right back down. So it's not as special as it once was. So the not special, nothing to look at over here. XOP also was looking good, just like the XLE. Again, was looking good on Tuesday, and then Wednesday, Thursday, Friday, it just got slammed right back down. It's holding the 21-day, but it's just not special. Let's start looking at some of the market driving stocks. So we have an Apple event on Tuesday. Now, the reality is most Apple events, the stock usually goes into it pretty strong, and then the announcement happens around 1 p.m. Eastern, and then the market just sells it off all day long. That's usually what happens. It's pretty much almost a layup short. I wouldn't say it happens 100% of the time, but probably 80%, even higher. It's pretty much a sell the event on the day at the time of the announcements. But for right now, Apple is looking good. And going into the event, you should expect some kind of retracement. So you're probably going to get it. Even if it's at 240, you may even be able to get this thing at around 235, 236. It's very possible it might pull into there. Microsoft was one special. It's not special anymore. Broke the 50, broke it with authority. This is a stand up and take notice day on Friday. Waiting to see what happens over here. Could we get down to the 480-ish area? Probably. It looks like that's where it wants to go. If that doesn't hold, you're looking more towards the 460 area, which would probably be at that point, get the 200 to catch up to it. So it may get down there. I think 480 is probably your line in the sand where you can probably step in, and you probably use, let's say, the 475-ish, 470 area as you're out. Well, if it breaks this little shelf over here, I would get out of the way and see what happens at the 200. Amazon, it's holding. It looks better than Microsoft, obviously, but it's holding. It's not really anything special right now. Google now. So Google is the one that's special. Google is really special. So you had this massive gap on Wednesday, gap and go. It's really looking great. There's really nothing you could say about it. It's definitely a little bit long in the tooth. From a day count rule, you can't buy this up here because really you've got your day one over here, then day two, day three, day four. Or even if you didn't buy here, if you bought on the gap, so it's 1, 2, 3. So day one, you buy. Day two, day three, you're trimming and trailing. Anything up here now is a chase. I would wait for this to settle in a little bit. It is holding. It's trying to hold it in 21. I'd like to see it take out Thursday's highs at around 761-ish. That would give you a clear sign that now it wants to go, and then you would be trying to target up 782 and possibly even higher, but it would need to hold, get above and hold 761-ish. Then you would be using around 745, 744-ish as your area to get out. The video, and we showed semis in the video, not looking as good. You really need a reclaim of the 50. So you'd be looking to buy this above Friday's highs at 169. Reclaim that, get above that, reclaim the 50, and then potentially starts to go. But right now it's definitely bent. I would be hesitant. I wouldn't go in with major size. I'd be legging into this. Friday's low is you're out. So basically, to a large extent, have a double bottom over here. This doesn't hold, you got to be out. This is your out. Basically 163. That's where you're wrong. You got to get out. You just got to get out of the way. Let's look at Broadcom. Broadcom was really good. Broadcom had a great gap on Friday. They sold it off. It held. If you want to buy this, it's pretty clear here where you're wrong. It's pretty much Friday's low as you're out. So if Friday's low doesn't hold and you want to buy this, then there's nothing to talk about. If you want to short this, which on this move, I don't know if it's going to fill the gap. I'd wait to see how it handles this. You would be targeting this 315, 317-ish area would be your target one. And then you'd be looking for a move down to, let's say, 308. If you're going to short this, Friday's high is your stop. Let's look at Netflix. So Netflix is holding and it looks good. We had this Thursday stand up and take notice. There was an igniting bar. So day 1, day 2 on your day 3 count. However, it did hold 50% of the move. So it does look good. For Monday, if you're going to buy it, Friday's low is you're out. It's very simple. It's very easy. This one's pretty much a layup. If you're going to get long, use Friday's low as you're out. Okay. Let's look at CrowdStrike. Stock is still bent and broken. There's not much to do here. One of the things about CrowdStrike, which is really tough, is because you had this recovery from earnings, and yet they took it all the way back down, and they took, to a large extent, the market took it past that low from the earnings day. We're holding the 200, but by a thread. This does not look good. It's very bent, very broken. I would not overstay welcomes over here. It could bounce, but the problem is a healthy stock and a healthy market should not do this. Or should not have this igniting bar and then 2 days later take the whole thing back. So that doesn't tell you that there's strength and health there. ServiceNow, it is bull flagging. It looks like it may want to go. So if you want to buy it, you have your spot here where you could buy it if you want. You buy above Friday's high, your triangle over here. So you do have a little bit of a way to, you could play this. You could just buy Friday's high, use Friday's low as you're out. Add above the 50, add above the 200, then see where it goes. And then you'd be targeting this 973 is, let's say, your target 1. And then target 2 would be this high over here. And then target 3, obviously. Those would be your targets if you wanted to get long. And if you're going to get short, Friday's low, Friday's high would be your stop. Target 1 would be here. Support 1 would be here. Oops. Support 2 would be over here. And then obviously target 3 would down here. Those would be like your levels that you'd be looking at. You could even, if you want to get long, you could technically try and get long against these support lines. But however, it's a little bit harder over here because we did recover and it is holding. But obviously it's the market. It could do anything it wants. But that's the way I would be looking at it. Let's look at Tesla quickly. Tesla's really just doing nothing. Honestly, it's not even worth looking at. There's better places to be. Just wouldn't waste your time here. It's just doing nothing. Maybe if it takes out Friday's highs, it wants to make a run for up here. Maybe if it can get above there. We'll see. And maybe starting to look at this $400 area. If it can get up there, it might be a little bit harder. Otherwise, there's not really much here to do. Let's look at Palantir quickly. Palantir's holding the 50. It's holding on by a thread. It looks okay, but I would be relatively suspect of this because it really, at this point, there's really nothing you can glean here. It can go in any direction. Last but not least, let's just look at quickly at bios and then we'll wrap it. So the IBB looking good. I would say this is more like your day 1. This is a power move. I would definitely be watching this. I think you should. We took out this high going back over here. So this is actually a good thing. We're definitely above it. You don't want to see the market get more than 50%. So really, this is really where you don't want to see the market get past this. So it's let's say 141.5. Anything below that, you got to change your bias on this. But right now, it's looking good. It probably can get up to here around this 150-ish area. If it can hold this, it's probably going to go there. Look quickly at XBI. XBI, same thing, looking really good. Again, taking out these upper level resistance areas that we haven't seen in a while. You'd be looking for a target up to around over here, around $100, the whole number. You could use this low as you're out, or you could use Friday's low. If you want to be tight, use Friday's low. If you want to be a little bit more liberal in your stop, you can use Thursday's low, but that's it. From a risk reward standpoint, this looks pretty good. Last but not least, let's look at the XHB, which is the home builders ETF. This is getting a little bit of love right now because of the anticipation of rates coming down. However, right now, from a supply standpoint, there's way more supply of homes than there are buyers. So I think this is getting a little bit ahead of itself. Technically, it looks fine. I'm not going to sit here and say that it's not. However, you do have to take a step back and see where things are going with this. Given the backdrop of the supply that's out there, like I said, we're at record levels for supply versus buyers. So this could get hit. And if it does get hit, maybe looking at, I don't even know if the 8-day would hold. This might even get down to around here, around this 112 area, even down to 110. Could definitely happen. I'm not saying it's going to be a skyrocketing thing, but I'm not going to sit here and say that it's going to fall out of either. But at the same time, you do have to take it with a grain of salt and realize what's going on from an inventory standpoint in regards to homes. Thanks for watching, and we'll see you on the next one.